What's up guys? In today's video we're going to be going over my top 6 stocks that I have for the month of July in 2021. We're going to be going over why I like these stocks, why I put them on the list, their financial data, and even some price targets that could be achieved very soon. I encourage you guys to watch all the way through to the very end of this video so you guys don't miss any of my analysis on these stocks. So without further ado, let's get right into it. Now my first stock on the list today is going to be ticker symbol ELY, otherwise known as Callaway. Callaway is of course a golf-centric company focused mostly on making clubs and anything involved with the sport. They also of course make apparel and have just recently entered into a stake deal with Top Golf. Now at the time of making this video, Callaway is currently trading at $33.27. If we look at their previous close, we're sitting at about $33.53. If we look at the 52-week range, we can see that only 52 weeks ago they were sitting at about $14.62, and now of course they're sitting at $37.75. The average volume for the stock is relatively decent. It's about 2,639,295. Their market cap is $6.144 billion. They have a PE ratio of 28.86, which is pretty alright. They have an EPS of about 1.15. They do not have a dividend yield, unfortunately. And overall, there's a lot of interesting metrics when you look at this company. If we take a look at Callaway's earnings, you can see here that they blow it out of the water most of the time. Unfortunately, they did miss just a little bit here in Q4, but again, for the most part, they are doing very well. If we look at the recommendation rating, we can see that this company is a 2, which is considered a buy. We can actually look at the analyst price targets as well, and we can see that overall, it's about $37 right now as the average, with a high of $45 by the end of the year. Now, the main reason I'm looking at this stock is mostly because of the Top Golf stake that they have. I think that that is a great move as far as business fundamentals go, and I think that if they can acquire more stakes of Top Golf in the future and increase their equity in that company and manage to even maybe take over it or buy them out completely, I think that would be a very smart and great move. With this stock, I'm looking at it more as a long-term hold. This is a legacy company that over the last couple of years has done very well for itself. I mean, just over the last 5 years, this company has managed to return over 216%. These numbers are really good, and it's a big reason why I have Callaway on this list. Let's get into the second stock on my list today, and that is of course ticker symbol CELH, otherwise known as Celsius. Celsius is an energy drink company, and it's marketed as a healthier alternative to all of the other energy drink companies that are actually out there right now. Its main competitor, and what most people continue to compare it to, is of course Monster. A lot of analysts and a lot of people who like the stock to begin with think that this could be the next Monster energy drink stock. If we look at Celsius' current price, we're sitting at about $72.36 at the time of making this video. If we look here, we can see the 52-week range of this stock is about $10.76, and then to the far 52-week range of $83. If we look at the average volume of the stock, we can see that it's pretty decent, about 1,212,771. The overall market cap is about $5.416 billion. They have a PE ratio of about 670. Their EPS is about 0.11, which isn't great, but again, this is a very new company. Now, what really impresses me about this company the most is its earnings and revenue growth. If we look at the 2020 earnings chart, you can see that they have beat earnings in both Q2 and Q3 of 2020 and meeting expectations in Q4 of Q1. We're still waiting to see the results for Q2, but I think revenue growth will exceed all expectations. If we look at their financials too, we can see that overall earnings hasn't been too great in 2017 and 2018. However, in recent years, they are actually coming with a profit. If we look at the recommendation rating, we can see that this is rated a 2, which is a buy. If we look at the analyst price target, we can see that the average is about $86.25 with a high of $92, hopefully by the end of this year. Now, one of the main reasons I picked this company is not only because of the massive revenue growth that they continue to push forward each and every quarter. If you look at their overall income sheet, you can actually see that their revenue growth is 88%. Plus, another big benefit is right now it's currently on a little bit of a dip. They just recently did a share offering not too long ago, but this is a unrelated dip going on, not related to that, of course, right now. And I've actually been doing a lot of buying up recently. This is one of my personal favorite stocks, and this is something that I'm going to be keeping a lot of updates on because I really love this stock. The third stock on our list today is going to be ticker symbol LMND, otherwise known as Lemonade. Lemonade is a disruptive insurance company that mostly focuses on renters insurance, home insurance, and even pet insurance. At the time of making this video, Lemonade is currently trading around $107.65. If you look at the 52-week range, we see about 52 weeks ago it was $44.11 per share, and 52 weeks later we saw $188 $8.30 a share. Of course, there has been a massive pullback since those highs, but there is a lot going on with the stock right now that I'll explain in just a moment. We can look at the market cap and see that it's about 6.611 billion. They do not have a PE ratio and they do not have any earnings per share, unfortunately. If we look at earnings, they only missed in Q2 of 2020, but the rest they either beat or met expectations on. As far as financials go, this company is not bringing home a lot of money. Their revenue is steadily increasing, but unfortunately the earnings are steadily decreasing. If we look at the recommendation rating, we can see that it's sitting at about a 2.8, which is a hold. And if we look at the analyst price targets, we see the average of $80 and we see the high of about $130. Now you might be wondering, well, these metrics don't seem too appealing, so what's so good about the stock? Well, in my opinion, metrics are a great way to measure the health of a company, but overall it's not the only way to do so. Again, Lemonade has been vastly expanding its operations. I've seen ads all over the place and they continue to grow their revenues at a steady pace. I think the real issue here is of course the profitability factor, and once they can truly start bringing home actual earnings in a positive direction, I think then we can maybe see a proper valuation of the stock. Unfortunately, there just is a lot going on with the stock right now and a lot of people are very unsure about it. Again, this is a riskier stock and that is why I only own a few shares. I'm not heavily invested in this stock whatsoever. It's a very small portion of my portfolio, but again, I still like it long term. This still has price targets at the high range of about $130, which I think is still really good. And again, even if it doesn't reach that, I'll still be happy because this is something I'm planning to hold over the next couple of years. For my fourth stock on this list, we're going to be talking about ticker symbol UPST, otherwise known as Upstart. Upstart is an AI lending platform that partners with banks to provide personal loans using non-traditional variables such as education, employment, and a variety of other things to predict credit worthiness. At the time of making this video, Upstart is currently trading around $121.21. If we look at their 52-week range, we can see that it's sitting around $22.61 on the low end, and on the high end, we're sitting at $191.89. Their average volume is around 4,334,143. Their market cap is about 9.322 billion. They don't have a PE ratio, they don't have an EPS yet. They do have an earnings date coming up on May 11th, and they unfortunately do not have a dividend. Now, if we look at earnings, they have done very well over the past couple of quarters. In Q4 of 2020, they beat earnings pretty significantly, and in Q1, they beat earnings even more. Q2 of 2021 still remains to be plotted, but again, I like the way that this company is growing in the rate that it's doing it. If we look at this company's financials, as you can see here, they are steadily growing the revenue, and just recently in 2019, they're actually starting to turn a profit and bring some home in earnings. If we look at the recommendation rating, we can see that it is a 2, which is a buy. If we look at the analyst price target, we're seeing an average of $138 with a high of $190. Now, one of the big reasons I love Upstart is just because of how disruptive it is and how it could possibly even change the credit industry altogether. We all know how difficult it is to get a loan nowadays, especially if you're a younger person who doesn't have as much credit history. And I think with a company like Upstart, where they're using AI to actually look deeper than just somebody's credit score at things like education or a variety of other factors that are deeper than just whether or not you make your credit card payments, I think are much better indicators of whether or not somebody is worthy of getting a loan. I love the concept. I love what the company is doing. Their growth is really good, and I'm really expecting a lot of big numbers to be pumped out this year by Upstart. My number 5 stock on today's list is going to be ticker symbol SOFI, otherwise known as SoFi Technologies. SoFi Technologies is an American online personal finance company. SoFi provides a suite of financial products that include student loan refinancing, mortgages, personal loans, credit cards, investing, and banking through both their mobile app and their desktop interfaces. At the time of making this video, SoFi is currently trading around $18.08. Their 52-week range is about $11.80 up to about a high of $28.26. The average volume of the stock is about 7,611,129. Their overall market cap is about 14.457 billion. They don't have a PE ratio, they don't have an EPS, and they do not have a dividend. Now, if we take a look at the financials, they are a little bit all over the place. As you can see here, the revenue has been kind of strange the way it's moving recently, but it is of course in a positive direction, which is always a great sign. Now, unfortunately, their earnings have just recently gone negative as of 2018, but they are slowly starting to curve back up into the positive. If you look at the recommendation rating on the stock, we can see that it is a 1.5, which is really getting into the strong buy territory. If you look at the analyst price targets, we can see about an average of $27.50 and a high of $30. Now, SoFi is becoming well established in the industry that that it's in, and I think personal finance is becoming more and more popular and more important every single year. It's the main reason we started this YouTube channel, and it's the main reason we make videos like this every single day. Mostly to try to help people, and I really like what SoFi, of course, is trying to do, helping people. I like SoFi overall. I like the price targets that they have for it, and I'm really looking forward to see what this company does this year. This is, however, maybe a riskier play, just like Lemonade, so once again, I am not heavily invested in it, but I do have a few shares. Moving on to my very last stock on this list, it might be a little bit unexpected. I'm talking about ticker symbol SAM, otherwise known as the Boston Beer Company. This is, of course, an alcoholic beverage maker, and it's a subsidiary of Sam Adams. At the time of making this video, the Boston Beer Company is currently trading around $953.85 per share. Their 52-week range is a low of $550 to a high of $1,349. Average volume of the stock is relatively low, around 180,239. We're looking at a market cap of about 11.72 billion. They have a PE ratio of about 49.44, which is really good. They have an EPS of about 19.29, and they unfortunately do not have a dividend. Now, if we look at the earnings of this company is a very healthy company, and it has been around for quite some time. They continue to blow estimates out of the waters every single quarter. As you can see here, it beat by $2.45 in Q2 of 2020, beat by $1.95, beat by 2 cents here in Q4, which is still decent, and Q1 beat up $2.65. It looks like for the month of July, there is a huge estimate here. They really put the estimate up, but again, I think that the Boston Beer Company could very well outperform that as well. Financials are absolutely beautiful. Revenue growth is on a beautiful upward trend over the last couple of years, and earnings have, of course, stayed in the positive, which is something we always like to see. We can also see that the recommendation rating for this stock is a 2.5, which is pretty much a buy. If you look at analyst price targets, we can see an average of $1,359.47 and a high of $1,800. Now you're probably wondering, why is this the last stock on my list, and why am I even talking about this stock in the first place? It seems like it's flying relatively below the radar. Well, if you do some digging and do some research, you can actually learn that this stock is actually heavily, and I mean heavily, influenced with other alcohol brands. I'm talking brands like Truly, Twisted Tea, any kind of hard seltzer brand that you can think of, this company is heavily involved with. One of the largest alcohol brands right now that is exploding in popularity, and is what I'm banking on this stock doing very well on the overall revenue growth, is Truly. Truly has been doing absolutely incredible lately. The popularity has skyrocketed here in just the last year. And of course, we're in the height of the summer season, meaning that there is going to be a lot of hot weather. And of course, hot weather always translates to drink consumption, especially alcoholic drink consumption. Pretty much every article agrees Truly is the drink to beat this summer, and the revenue growth is likely insane. So of course, the Boston Beer Company stock will likely benefit from these numbers. The price targets are also absolutely beautiful, and of course, we've already hit the price targets and even gone a little bit further than them to begin with. I'm really looking forward to the continued growth of this stock, and it's the main reason why I have it on this list. But other than that, guys, that is pretty much it for my top 6 stocks for July 2021. If you guys found this video helpful, and hopefully I brought you some value today, please make sure to like the video and make sure to subscribe so you guys never miss new videos like this. Again, we post 2 new videos every single day about stocks, cryptocurrency, real estate, or anything with a $sign attached. So if that sounds like something that's interesting to you guys, make sure to hit the subscribe button. Also, if you guys want to pick up some free stocks with WeBull, check out our WeBull link down in the description below. When you guys sign up and deposit only $5, you guys will get up to possibly a lot of money in stock. So if that sounds like something that's interesting to you guys, check out the link in the description below. But other than that, guys, that is all I have for you guys today. I'm Kyle with Finance Bro. Take it easy.